It's Yvette going live at 5. So, this afternoon, well, a little bit late last week, I was given a challenge to go live for 5 days in a row. Now, everyone who knows me knows that I do not like going live. I don't know what it is about me going live that I have a problem with because I love to talk. So I don't understand what the issue is. But usually I'm not the type of person that always goes live. So having this challenge is really taking me out of my comfort zone. I'm really liking the fact that I'm going to be taken out of my comfort zone to talk to you live about different things, especially about taxes, because I love it so much. So, for those of you who do not know me, my name is Yvette D. Best. I am your small business tax accountant. I take great pleasure in keeping small business owners IRS and state compliant while increasing their cash flow and maximizing their tax refunds. And I even wrote a book about it. So, with that being said, um, the main thing that I want to talk about today is just important things that you need to know about the changes that happened during this COVID-19 event that will impact your taxes in 2021. Now, there are a lot of people who were not impacted by COVID-19. They are still working. They may be working at home. They may still actually be going to the workplace. And they're just continuing to receive their checks as normal. And hopefully, with this extra money in their pockets, because we couldn't go out and eat, we couldn't go to the movies, we didn't have any entertainment, that you are paying down debt and getting debt free. Now, for those who were impacted by COVID 19, whether they were diagnosed with COVID 19, had to take care of someone who was diagnosed with COVID 19, or just affected in a way that the business had to close down, shut down in its entirety, and you were on unemployment. Now, what happened is a lot of people were getting unemployment, but almost 37% of people do not know that unemployment is taxable. Not only is it taxable on the federal level, but it's also taxable on the state level, depending on the state. So what happened is a lot of people, especially when they was giving out the extra $600 per paycheck, some states were able to take out withholding, but there were some states who did not take out withholding from this $600 because they did not want to slow down you receiving your funds. So you have a whole 300, about 21 million people in the United States, give or take. And now you have some that's going to have withholding taken out and some that's not. That's going to cause a big surprise when tax season comes because of the fact that unemployment is taxable. That $600 that you received is taxable. Now, you add that with the case that you may get a new job, you may get more money. You have to take some type of withholding to help offset the withholding that you did not take. So, what can you do? You can make an estimated payment. So, estimated payments are made on September 15th of this year and then again in January of 2020. But if you take and put your money in any time of the year, the IRS will definitely take it if you like to make an estimated payment. Um, whew. Also, another thing about the unemployment is that people do not understand that unemployment is not earned income. And when you are getting certain credits, such as the earned income tax credit, unemployment is not part of that equation. So let's say if you had $15,000 of unemployment, and then you couple that with $15,000 of earned income credit. So people would think, oh, well, they're only going to give me the earned income credit at that lower amount, 15,000. But that's not correct. What's actually going to happen is you're going to get earned income credit, but they're going to give you the amount at $30,000. Now, that's a high amount when you get an earned income credit, especially if you only have one child on your tax return. So I want people to please take into consideration how this unemployment is going to play a large part on how big or small your return is going to be next year. Now, let's talk about one other thing, this retirement. So, of course, with the CARES Act, retirement people were able to withdraw money from their retirement. And they was able to take out up to $100,000 without having a penalty. Penalty is the key word, not tax. It will still be taxable. Even if they're going to be able to tax it over 3 years, you think about at roughly about $33,000. That's probably about an estimated $7,000 of tax that you will have to pay on that money. And where is that money coming from? Because remember, most people didn't do a withholding when they took out this $100,000. And that is one of the tips that I even had in my book, that people withdrawing from their retirement is causing them to tank their refunds because they're not taking out any federal as well as state withholding. Because again, most things that are taxable on the federal level is also taxable on the state level, depending on your state laws. So what can you do? So most people who have taken out money from their retirement, they may not have used it all. So if you have some on hand, I would suggest maybe taking and making an estimated payment to offset the taxes that you would probably have to pay next year. But what else can you do? Meet with your accountant. Your accountant right now should be doing all type of future tax planning. I'm meeting with clients right now to go over their tax issues to be able to let them see a glimpse of what their tax situation is going to be next year. That is what tax planning is. It cannot be done in January after the new year. It's too late. So right now, what you want to do is contact your tax person. Tell them, hey, I want to meet with you. And please know that this is not a free event. You should be willing to pay to meet with your tax person to tax plan. It will be key because this year is unlike any other year that we have experienced in this lifetime, and I hope we won't experience it no more in my lifetime. So I want you to tax plan. If you do not know what tax planning is, or don't have any clue of what tax planning is, or never had any tax planning, reach out to your tax person. And if your tax person is not available or they're not there, I'm available for tax planning because, again, tax planning is going to be key. So if you take out any money from any sources, whether if you're receiving unemployment, if you receive some type of benefit for this COVID-19 event, if you receive any money from your 401ks, your IRAs, your dividends, please withhold your federal and state withholdings. It is going to be key to make sure that you do not have a big tax surprise in 2021 when you get to the table and they tell you that you owe. You don't want a repeat of this. We went through this in 2008 when the market went down and everyone was taking money out and people were unemployed. They was hit at the table when they realized that the usual 8,000, 10,000 of earned income credit tax returns they usually would cut down to like 4,000, 5,000. And I just don't want you to be surprised when you get to the tax table next year. So that is the most important thing that you can do to make yourself ready for tax season. Reach out to your tax person. Make sure that you have a future tax planning event so you will see what your income is going to look like, what your taxes are going to be, and then you can make plans to make an estimated payment in September or in January of 2021 to be able to not have a tax surprise or a tax bill. My name is Yvette D. Best, and this is day one of the tax challenge. I will be going live at 5. Today was the first day. I will be going live at 5 on Tuesday, Wednesday, Thursday, and Friday. I am not sure of the time that I'm going to be going live on Friday, but you will be getting announcements to let you know what time I will be going live. I'd like to thank you. Please continue to be safe. Continue to be healthy out there. Continue to be wearing your mask. We got to get back to whatever they consider to be normal. And the only way we can do this is we all work together. And thank you for tuning in. If you watch the replay, share it, because again, a lot of people do not know how this unemployment that does not have any withholding, this retirement that they took out that they're going to be taxing over the next 3 years is really going to leave them with a big tax surprise at tax time. And I want them to be prepared because preparation is key, tax planning is essential, and tax planning is a year-long event. You can't do it in January of the year when you're getting ready to do your taxes. So with that, I say, please have a good evening. Enjoy the rest of your night, and I will see you tomorrow at 5.